Hello, and welcome to Money Mystery No More. Even though money can seem to be a tough topic, sort of like math or economics, there is a hunger by many to learn more about it. This channel exists to educate people about all things money while making it easy for them to learn. You will benefit and get the most out of this video by expanding the topics of our prior video, Financial Education is Not Forgotten, into this video. Get interested in the various subjects and act upon the knowledge. You can embrace continuous learning because there is financial education, more not forgotten, by keeping it simple. It's awesome. And remember, hit that subscribe button to keep getting the latest and greatest information. Okay, let's remove the mystery. Simple truths are not always pleasant. And it's a truth that financial education involves becoming financially literate. That basically means you have the ability to grasp and apply various financial skills, principles, and concepts. This includes topics we discussed previously, such as bank accounts, credit unions, credit cards, debit cards, the 4 pillars of debt, budgeting, saving, and investing. Well, there's plenty more to cover, such as insurance, how to invest, and the benefits of financial education, just to get started. Ongoing research and surveys continue to find an astonishing 75% of us say money issues and personal finance situations are our #1 cause of stress. That's a problem. More troubling is that welfare hovers near 20% at any given time. Most people don't have $1,000 for a real emergency, and only a mere 15% or so have saved enough for their retirement. It's mainly due to people lacking the knowledge and experience needed to make confident and smart financial decisions for any particular situation. While those numbers are shocking and a bit disturbing, they do suggest opportunity is ripe for improvement. You see, research has also shown that people who learn more about money and get financially educated by embracing financial literacy, A, often spend more carefully, B, do have an emergency fund of at least 3 months' income, C, do manage their debt and savings, and D, do have investments, including a retirement account. Now that is encouraging news. As presented in our original video, Financial Education is Not Forgotten, the message is clear. Get on the path of financial literacy for a better future with your money. That path includes the money-related topic everyone should get more familiar with, investing. You don't need to be an expert to invest effectively. In fact, you can start with some basics and eventually develop some significant knowledge and experience. Investing does typically require you to buy something in the financial market through a broker. The broker handles transactions on your behalf, whether they are a professional person or you act as your own broker through an online platform. Any transaction, purchase, or sales are done through a broker, even if it involves an app on your phone. There are 3 basic categories of brokers. A full-service broker will manage your investment transactions and provide you advice for a fee. Paying for this service may make sense in the beginning as you develop your understanding of brokers, the market, investments, and so forth. An online discount broker will execute your transactions and may even provide you financial advice. Self-directed investing has become very popular with nearly all financial institutions offering online platforms. Think of companies such as Fidelity, TD Ameritrade, and Charles Schwab. Service offerings for self-investing include regular income accounts or retirement accounts. Another type of broker more common today are robo-advisors. Requiring little human interaction or assistance, these software programs are designed to automate investing as it relates to your financial goals, including retirement. Basically, once the path is determined, the software algorithm does the work for you as your trades are picked and executed. This type of service is provided by firms like Betterment, Wealthfront, and Schwab Intelligent Portfolios. Regardless of the type of broker you ultimately use, you'll engage in various types of investments from ETF, stocks, mutual funds, and bonds, to name a few. ETFs, an exchange-traded fund, are well-known investments used for straight investing, trading, and retirement plans. ETFs invest into a broad range of industry sectors and are usually tied to an underlying index, something it tends to track. An energy ETF, for example, may be tied to companies involved in the wind, gas, and fuel energy sector. Stocks are known by everyone. They're a common investment option. Stocks, shares or equity, are an investment type that signifies partial ownership in the company issuing such stock. A perk of you owning stock is you, as a stockholder, are entitled to a proportion of the corporation's assets and earnings. Many individual investors opt for mutual funds. These are one of the most common investments because they are professionally managed at low price, offer diversification against risk, and they have a solid performance track record. Mutual funds are not like stocks because they provide a combination of assets through a broad mix of stocks, bonds, or other securities. Because of the broad mix, a negative impact to one company isn't as shocking to your investment because the fund is likely tied to dozens or hundreds of other different companies. Then there are bonds. Effectively, when you buy a bond as an investor, you are lending your money to the bond issuer. They're using the bond money to finance projects or operations. These are much safer investments because the issuer usually pays a consistent return on the investment called a coupon rate and is often a guaranteed bond. The payback is guaranteed by a third party, in many cases the financial institution or government entity involved with the former mentioned project. Investing is always a risk and never a 100% guarantee. But the historical proof of success with investing is trusted. The key takeaway is simple. Learn about investing because it's a critical key of financial education. Next up, insurance. Another pretty important piece of financial education, and insurance is a big business, especially for you personally if ever needed. It's literally a risk gamble. You must decide to insure yourself for or against risk events, happening or not happening. But insurance can be a real lifesaver when needed. In my case, it was homeowners insurance. I've lived through 3 house fires and lost everything I owned twice. Insurance covered us with one fire, and lack of insurance cost us everything with the other. Trust me, you want insurance. Paying 100% of the cost to replace everything is not something most people can handle financially. Insurance will share that burden, shouldering the bulk of the cost for a catastrophic situation. Some even help coordinate transportation and living arrangements if necessary. Look at 7 primary insurance areas to consider having risk protection for. 1. Vehicle, whether a car, truck, van, moped, or bike. 2. Homeowner or renters. There's too many types of accidents that could occur. 3. Life. Maybe you want to leave something for family, friend, or foe when you pass. 4. Pet. Come on, you big softy. You have some sort of pet you want to protect. 5. Personal effects, also known as riders. They cover items like jewelry, firearms, and art. 6. Accidents and disability, for those unpredictable arm or leg breaks, or worse. 7. Health, medical, for your day-to-day general well-being and health. Now honestly, reflect whether or not you could handle a catastrophic loss or event with any of those 7 areas, if you had to pay for it, all of it, out of pocket. If the answer is yes, maybe you skip insurance. But if that answer is a little too uncomfortable or a definitive no, hedge in favor of insurance with an understanding that it's better safe than sorry. Sure, it sounds like a lot. Think of it like the tortoise and hare though. Slow and steady wins the race. Key steps for you to become financially literate will ultimately lead you to creating a budget and spending more carefully, managing your debt and savings, hopefully paying your debt down to 0, learning how money works, having an emergency fund of at least 3 months' income, owning your financial challenges instead of running from them, doing some real financial planning with goals and achieving them, having investments and a retirement account. All this financial education talk surrounds the daily themes in our lives involving most financial decisions we deal with every day, such as banking, budgeting, saving, credit, debt, and investing. At its most basic function, financial literacy will certainly help you rely less on others as you learn to manage your money responsibly, make good financial decisions, deal with debt, and take control of your financial choices, obligations, and goals. A greater reward will be greater financial independence, reduced stress, and an overall improved financial well-being due to financial stability. Think about it. All those benefits of financial education just because you learn more about money. Get financially educated and embrace financial literacy. As touched upon in our prior video, there are many resources you can take advantage of to grasp that knowledge on your own, including Motley Fool, which is well known because they've been around a long time providing investing insights. Motley Fool Money offers a clean website with their main banners hitting credit cards, banks, brokers, crypto, mortgages, insurance, and loans. Then there's the National Financial Educators Council, a leading provider of independent financial wellness resources, training, and opportunities to people that are stewards of teaching financial wellness to others. Many financial institutions, banks, and credit unions offer free financial courses, money planners, and even online interest calculators to help you understand down payments, interest, and loans, like Bank of America's program, Better Money Habits. Their library of free resources provides engaging videos, articles, and resources on budgeting, saving, retirement, home ownership, and more for millions of people each year. A great resource, Investopedia.com, offers 25 years of experience with access to more than 36,000 financial topics through articles, frequently asked questions, and videos. And remember Coursera, another online option letting you filter through what you want for yourself, a business, university, or even a government entity. Their programs can even be geared for specific skill levels, languages, course length, and even educational levels of curriculum. For educators themselves, there was an interesting PDF put out by CFPB, the Consumer Financial Protections Bureau. Basically, their 2024 updated research was published as the 5 Principles of Effective Financial Education, also dubbed Reflection Guide. and presents guidance for a wide variety of financial education programs and activities. Last but not least, this channel, Money Mystery No More, offers dozens of videos to provide valuable insights and knowledge into a wide range of money-related topics. Plus, we make it simple to understand, and hey, sometimes it's even fun. So yes, the benefits of financial literacy and education are pretty important. As mentioned earlier, it offers encouragement. Take what you've learned here and combine it with all our other videos and subject matter. Watch our channel to accelerate your financial literacy. Embrace continuous learning and just know there is financial education, more not forgotten, by keeping it simple. Remember, hit that subscribe button and turn on notifications so you keep getting the latest and greatest information from Money Mystery No More. I'll see you in the next video.